The bank flow trades are where we instruct on recommended times to trade different currencies based on the information we have on pending bank and institutional orders, which due to the volume they trade tend to move the market significantly. Our experience and results have proven this to be true. All of our postings are made at our website at forextradersdaily.com. In this particular example, these were bank flow trade opportunities from December 12, 2007. They were made on the New Zealand US dollar, US dollar Swiss franc, and US dollar Canadian dollar. Our posting was made at 7:28 a.m. Eastern Time to sell the New Zealand US dollar at the 78.65 to 70 area, to sell the Swiss franc at the 1.13865 to 70 area, and to sell the Canadian USD Canadian at the 1.0165 to 70 area. Taking a look at the charts, vertical line is the time that the posting was made, and this is on the New Zealand US dollar. As you can see, the market was right around the 78.65 area that it mentioned. Again, posting said to sell the New Zealand US dollar at 78.65 to 70. About 30 minutes after that original posting, there was a new posting made on the New Zealand US dollar that there were additional orders at 78.90 and 79.09 for these particular areas. And as we can see, about an hour later, the market did make it up to those areas based on some news information that came out. Actually spiked up to around the 79.25 area before dropping back down, providing profits on these trades. And if you see by the following morning, on the 13th, the market had moved at least 75 pips from the original entry and over 100 on the additional 2 entry points that were recommended December 12th. Taking a look at the USD Swiss franc, again the posting said to sell the Swiss franc at the 1.1365 to 70 area. It was a bit of caution given that it will be the second attempt at them, so be cautious about this particular trade. This line here denotes the 1365 area. As you can see, the market did spike up based on that economic news around 1385 before reversing, coming back down in agreement with the trade. And eventually, again, by the following morning, the market had dropped approximately 60 pips down to the 1300 area. So it could have provided potential of 60 pips of profit from that particular trade. Finally, on the USD Canadian, posting said to sell the USD Canadian at 1.0165 to 70 area. You notice here the market, when it did spike up, it spiked up exactly to that area. It made a high of around 101.70 before making a quick drop back down, and eventually, again by the following morning, down to the 1.0100 area. So again, on this particular trade, it provided 60 plus pips of profit potential. So between the 3 trades, there was over 200 pips of profit potential if you had followed the recommendation on the 12th. We did manage the New Zealand trade. There was not much on this particular case of management on the Canadian or Swiss franc trades, but on the New Zealand trade, as you can see the following morning on December 13th, it said that the New Zealand had now paid out at least 50 pips of profit. So you can clear the trade or at a minimum lock in profit from that particular trade.